Good evening, everyone. My name is Larry Steinbacher, and I am the broker owner of the Century 21 Transcendent Real Estate Office here in Medina, Ohio. And this evening, you are listening to Larry. And with Larry today, I have Mike Bankowski with Nations Lending. He is one of our preferred lenders in our office. So we are going to be this evening discussing the housing industry, the lending and mortgage industry, and the like. And basically, I'm going to be asking some questions that you may not have thought of, and let's find out what we can find out from all of Mr. Mike Bankowski's knowledge here. So, Mike, you want to just give us a quick intro as far as how long you've been in lending, how long you've been with Nations Lending, and so forth?
For sure. Well, first of all, thanks for having me on. And look, I love what I do. I've been doing this for 25 years. I'm a master of one craft, and that's it. I'm pretty much useless for everything else outside of mortgage lending. It's my forte. I take a lot of pride in what we're doing over here, putting people into houses, and I've been with Nations Lending for the last 15 years. So I call that place home. I love my owners. They're good men. We're here. We've got a greater purpose. We're trying to help everybody get into houses.
Okay, thanks, Mike.
Sure.
So one of the initial questions I have to ask you is that when at the end of last year, beginning of this year, people were talking about a housing bubble. They were talking about a recession. There was a lot of questions of what's going to happen with the entire housing industry basically this year. And what I wanted to ask you is if you could just go through like the major differences that you've seen, say from 2008, the major recession years to this year right now. Like what are the major differences between the lending practice since that point in time?
So, having been in lending for all those years, I was just a young boy back in the early 2000s, and we were writing a bunch of bad loans. I mean, this is what the banks were handing out. I guess I was too naive to know the difference, but they were some adjustable rate loans and some option arm loans, some negative amortization loans. It truly created a recipe for disaster. And as you saw, as a result, we had a plethora of houses out on the market. Completely polar opposite of where we're at today. The housing market is stable, but we are suffering a major lack of inventory. And we had a bunch of houses the last time in 2008, and now we have a bunch of buyers in 2023. So it's causing a little bit of a kerfuffle. From what I gather from my realtor partners like yourself, I talk to you guys on a regular basis, and you get a hot listing, it goes on the market, and by Sunday at 8 o'clock, we've had 20 offers to go through. 40 people show up, 20 people write an offer. It's probably the most wicked market that I've actually worked in, because everybody's fighting over the same houses that are available.
Alrighty. So if I go back to 2008, and I was a relatively new realtor at that point in time as well, what I saw is that, again, pretty much anybody could get a loan that was looking to get a loan. And that being said, like you were saying, there was a lot of inventory on the market. Unemployment rate back in the 2008 and years thereafter, I think we went 6 straight years where it was over 6%. Right now, currently, we're at about 3.5%, between 3.5% and 4%. Back in 2008, believe it or not, if we look at the total equity that U.S. households had, it was about $1 trillion. Today, with all the rising prices that we've had over the last 2 years, the total equity that homeowners currently have in their homes are over $3 trillion. So a lot of people will say, hey, is the market going to crash? Are we going to have an abundance of homes, foreclosures hitting the market? The quick answer is probably a no, a solid no. There's a lot more equity in homes. Unemployment rate is significantly lower than it was back in the 2009s. Our salaries have increased 50% from that time frame. There's really no reason for individuals to lose their homes, quite honestly, and to see that plethora of homes that you're going to see hit the market.
Different time.
Yeah, different time and so forth. So that being said, we go back 2 years, and the mortgage rates back 2 years ago was in the high twos. And now we're what, close to 7%.
You got it, Larry.
What does
Right on the
that
head.
what does that mean to buying power?
So, I mean, I just look at an average price point, and you know, if we're working around 250,000, you're talking an extra $650 a month in payment. Almost unfathomable for buyers that were in the market 2 years ago when interest rates were lower, and they didn't find the right house or they chose a different path. Um, it's different. Yeah.
Okay. So do you anticipate, I mean, I've got people that are like sitting on the sidelines thinking that they're going to be better off in 6 months to a year. What do you say to those buyers?
Here's what I say. This is my take. Is when interest rates go up, you knock some people out of the market. You're knocking some competition out of the market. Some people just won't have the funds to buy the same house, or they may not just be able to purchase at all. Larry, I would probably say that now is the best time to buy. You can always refinance at a later time. I'm telling all of my clients, if you find the house and you fight for the house and you get the house, you're better off. You're going to have rising equity. There's all sorts of reasons for people to become homeowners rather than renters. And I'm telling all my clients, be patient. There was a very catchy saying going around, marry the house, date the rate. That was it. Marry the house, date the rate. I mean, it's been so long since anybody's been saying it, but I mean, with the interest rates where they're at right now, this is going to lead. I'm sure we're going to talk about this here, Larry. Is where are rates going to be going here in the future? But interest rates right now are higher. You've got less buyers. As soon as those rates drop, you're going to have a lot more competition coming out of the woodwork. It's a double-edged sword.
Do you have any statistics? I've got some economist quotes or rates where they anticipate the rates being within the next year or two. Do you have any information along those lines where you anticipate seeing them in the next year or two?
Well, Larry, this is a very loaded question. I'm not a fortune teller, no crystal ball, and I personally can't count on any of the information delivered to us. Perfect example is 2 months ago, Jerome Powell, federal chairman, he comes out and says we're going to be lowering interest rates, and then they're going to be raising the interest rates. So your guess is as good as mine. There's a lot of different factors. I think maybe some people don't really know that there's a lot of different factors. I mean, we're talking global economy, folks. It's not just not just what we've got going on over here in the U.S. that affects our interest rates, but worldwide, and it's tough. I'd like to say that they were predicting interest rates to get lower as we get to the third and the fourth quarter. Next year, I think, might be a little bit better of a year. I always have a theory, Larry, and it's any election year, I always feel like no matter who's in office, I don't care about your political views, but no matter who's in office, somebody's trying to stay in office. And the clouds part, and the sun comes out, and everything's unicorn and rainbows, and I'm anticipating that interest rates will get lower as they're projecting interest rates to get lower.
Right. Okay. So we're still potentially looking at 2 Fed rates increases this year.
As they say, as they say, we really don't know, Larry. I mean, that's
right.
The honest to goodness truth.
Right.
I mean, if anybody knew the market, if they could predict it, but there's too many outside factors, I think, to consider. I wanted to believe. We were all very hopeful that when Jerome said we're going to be lowering the rates, that they were going to do that, and then they did, and here we are. So
okay, what I saw from the National Association of Realtors and from Fannie Mae, even if we get lower rates, we're talking like potentially next year to be in the mid 5s. It's not like we're going to be dropping to the high 2s anytime within the next couple of years.
Sure.
I would say within the next year for sure. So, and that being said, along with that, we're looking at housing prices increasing. Going into this year, people weren't quite sure where that was heading. I can say last year towards the end of the year, we saw some slight decreases. By slight, it depended again on the market you were in, but maybe like 0.5% were in decreases. But then starting this year, we're back up again, 1 to 2%. They're anticipating that to occur through next year, maybe a 1 to 2% increase through next year. And then after that, we're back up to the 3-4% increase per year is what's being forecast. Okay. So that being said, there's no reason for people, I guess, to be waiting to buy a home.
Don't wait.
I mean, rates could potentially go down. Housing prices can go up.
Sure.
They're going to wash each other out. And, again, depending on what market you're in, there's probably not really a valid reason to be waiting or holding off at this point.
No. And I'm sure you've probably read some of these, you're probably a numbers junkie and statistic guy like I am. We like data, guys. We just like to see what the facts are. And people who bought 2 years ago, they had to fight. 2020 was, when we were in COVID, it was ridiculous. But people had to fight, and they fought. They might have overpaid by $10,000 for that house, but they're in a definite positive equity position today because of the demand. So,
okay,
buy houses.
All right, let's get into some specifics. And I guess the question I have, and a lot of people have that I hear all the time, if Nations Lending is quoting, say, 7% for a conventional rate 30-year loan, okay, and they see somebody out there, a different mortgage company that's out there quoting, say, 6.75%. Are those always apples to apples comparisons?
Absolutely not. Read the fine print, folks. There's a big mortgage lender in our area. They can remain nameless, but if you read the fine print, you're going to see how much money they're charging you in points and fees, and that's where it's not exactly a level playing field. It's a little bit more level than it used to be, but it's not exactly a level playing field. You have to pay attention to how much are you paying to get that interest rate. So, the honest answer is there's a lot of factors that go into your final interest rate. Some of the things that make adjustments to your interest rate are your credit score, or how much house are you borrowing. Because we're a national mortgage banker, I do business out of state, and things vary. Things are different from state to state. So they're called loan level price adjustments. So easiest way for me to try to explain it to in layman's terms is, if everybody starts out at the same interest rate, somebody who's got better credit might get a little bit lower rate. Somebody who's got a larger down payment might get a lower rate. If you've got worse credit, you might get a higher interest rate. It's the risk and reward is what it is. If you have better credit, you may be paying less. And if you have worse credit, the pricing, the cost of the points is definitely higher for somebody who is maybe not as prepared. Somebody who's got a little bit of scratch and dent credit, their scores might be lagging. They could have had a life event. Everything, life happens. So they could have gotten divorced. That seems to be very common. So everybody's got a little bit different of a circumstance, but your credit scores, your loan size, they all play factors in the final interest rate. And banks, we kind of control that. It's called profitability, right? We're in business. If I gave everything away for free, I would have no business. But we're in business to make money, but we get to decipher how much are we going to charge. I've had clients, come back to me and tell me, is there any way that you can, do a little bit better? And more often than not, I'm trying to lead with my best efforts, trying all the time. But there's wiggle room. This is the business that we're in. Look at the fine print. That's all I can tell you. If you go onto the websites and you see the interest rates that they're quoting, click a little further. You're one click away from actually knowing what the costs are. It's very fine print too, folks. And a lot of you get lost out there looking at the sites, and you're not looking at the fine print, and you're thinking that could be my payment. Well, it could be if you have an 800 credit score, if you put 20% down. There's a lot of different factors that are going to decipher your final interest rate.
So if somebody is like advertising, say, a quarter of a point less than you are, could they be like charging points on top of that to lower the percentage rate? Yeah. So their origination fees or closing costs, they're not necessarily built into that interest rate. And then bottom line, when they go to the closing table, they're getting hit with $3,000, $4,000, $5,000 in additional costs that you may not be charging them.
Correct. And what I try to tell people is there's a cost for everything. I may not be the cheapest in some instances, but I can assure you that I could be the best, and I will get the job done. And If it means you and your kids starting school on time and getting the job done with the least amount of hassle, you want to pay a professional. You know, you've got to pay people. I have an amazing team. I don't do all this by myself. I have an amazing staff, and we're an assembly line. And all of us are highly trained, highly skilled, very experienced. We love what we do. That makes a huge difference. But yeah, you got to read the fine print. Everything you're looking at here, click a little further is all I'm trying to tell people, because your eyes are going to jump out of your head and you're going to say, holy smokes, I didn't even see that. Don't get caught by what you're seeing on the sidelines over there. And a lot of these sites, when you pull them up, they're all kind of similar. Would you agree?
Oh, absolutely.
Okay, so
Yeah.
and I jump on a couple different ones from time to time, and I'm seeing this one's advertising this one's advertising this. Bankrate is probably one of the best places for anybody to go. As long as the company is able to offer the interest rate, they can advertise it. Even if it means it's costing you an absurd amount of points. It's kind of bait and switch, right? You know that tactic. It's out there, folks.
Okay, alrighty. Do you, once a person applies, don't you have a certain number of days that you've got to provide them all this additional information, like their closing costs and their origination fees and all that?
Yeah, you know, that's a great point, Larry. And as long as the consumers do everything that they're supposed to do on their end, we can tell them same day in a lot of cases. Sometimes it's a matter of hours. I've had to get pre-approvals out, and if my clients can get me the documents that I need to verify, we can get that stuff out lickety split.
Okay. So they should be able to do this if they're shopping lenders for any reason. They should be able to do that with everybody and look at apples to apples.
Correct.
See what's going on then.
Yeah. So, and I mean, Larry, I have honestly had higher closing costs and a lower payment in some scenarios.
Right.
I mean, that's math, folks. It's
Yeah.
but it does happen. Sometimes I could be charging a little bit more, but it depends if my interest rate's a little bit better. In the end, you're going to save more money.
Can you discuss what an adjustable rate is, and if are they coming back into play at all?
Yeah, I've seen a lot. I mean, I've seen more adjustable rates. There was a time frame when interest rates were really, really high, and everybody was looking at, ARM is adjustable rate mortgage, folks. A lot of people were into them. If you're planning on moving, like let's just say you buy a house and you know that you only want to be there for 5 years. If you get a 5-year secure loan, you're going to have a little bit better interest than if you were to get that 30-year fixed. So we are starting to see more of the ARM product come back. Back in the day, right before I want to say 2008, they had these interest-only loans. It's only good for the right borrower. It's only good, in my opinion, for the savvy person who's leveraging their money and they know what they're doing. Because if you give a consumer the option to pay or not to pay, I guarantee we all have 10 other things that we want to spend that money on. So I am seeing more ARMs, but again, it's for the right scenario. And then we have to forecast. Like right now, I'm telling people, don't pay as much in points because they're going to lower the interest rates. If you pay a lot of money today, and you refinance in 12 months, I'd rather you not pay all that money and just refinance in 12 months or whatever it is,
I guess that was my next question. At what point, what does it make sense for somebody to consider refinancing?
Okay, so some of these are loaded questions. We got to time the market, right? We got to time the market. The window of opportunity is only this big. And I've been doing this for so long, Larry, and I lock people in with no crystal ball. And I tell them, this is as good as it is today.
Right.
Do you want to wait? Do you want to risk rates going up? I mean, the slightest sneeze in Europe can affect our interest rates. So I prefer to just lock people in. And when interest rates, when they kind of bottom out, we should have an idea of when they may be at their lowest levels. What we can't predict is how quick do they go up. It's harder to predict that. But you got a lot. I mean, you follow the same people that I follow, and there's big names out there, folks. I'm not coming up with any of this information. I am just regurgitating it back to people. But there's a lot going on right now with this housing market right now. And frankly, I have a question for you. Am I allowed to ask you a question?
Sure, fire away.
When does it end, Larry? Because I got so many people coming to me saying, Mike, when's it going to end? When are we going to be in a normal market? And I'm only 25 years into my industry here, and I've never seen anything like the environment. And what I've heard is that we're short 3 to 5 million houses nationwide. Is that
Absolutely.
so?
Yeah.
I'm asking questions
Yes.
like this.
And the builders have not been building enough homes.
And why is that though? Is supply?
That interest rates affect the builders as well, and in particular the custom builders in
Okay,
our area.
right.
Lumber prices, when they started skyrocketing
Yeah.
last year, all of a sudden the prices started double tripling on them, and
So that's gonna
even
slow.
though they're quoting a number to a potential buyer of theirs, all of a sudden they're having to go back with like a special assessment because their lumber prices just skyrocketed. So it's hitting everybody at every stage of this.
When does it end?
That's a great question.
Because
again.
this is, I was wondering if you were going to ask me that, and I mean, we're obviously in two different seats on the bus, but I don't know when it ends. I don't know how this gets fixed. It's, I guess I'd call it a little bit of a crisis.
What I will say in comparison to last year, though, believe it or not, I used to at one point have anywhere in the neighborhood of 30, 40, 50 listings at a time, just
Yeah.
myself personally. Today I'm lucky if I have 10 at a time, just because there's no more for sale by owners. There's no more expired listings. Once
Yeah.
a home goes on the market, they're gone that quickly, that rapidly. But I will say, in the last month to 6 weeks, I probably have had as many, if not more, listing appointments already in the past 6 weeks as I had all of last year.
Okay.
So people are looking to move. People are getting their properties back on the market. I think they finally have recognized, in my mind, that just what we discussed earlier, that the rates aren't going to go shoot down anytime soon.
Yep.
The prices are going to continue to increase. There's no reason to be waiting a year, 2
Sure.
or 3 years down the road anymore. I think that finally is coming to fruition, that people are comprehending and understanding that.
They have to. It should be
Yep.
an easy concept to grasp, in my opinion. I mean, you're wasting money. The only time that I would say it's okay to rent is if you have a unique situation. That's when I would say that it's okay to rent. Otherwise, if you're staying in the same neighborhood and you're living in the same state, you're not going anywhere, you're either going to be paying the landlord's mortgage, and correct me if I'm wrong, but rents are through the roof.
I'm glad you said that, because at the end of this, any of you that would like a buyer or seller's guide, they're separate. Buyer or seller's guide, they're like 20 some pages that I would be glad to email out to you. And that is one of the charts that's on there showing how rents have increased over 50% in the last 2 years. It's
Unbelievable.
Yeah. So people are just throwing it out. They're not getting equity whatsoever. Again, there's a chart on there that shows, I think, that the average renter throughout the entire United States has somewhere, and again, don't quote me on this, has somewhere in the neighborhood of $6,000 equity. The average homeowner has over $200,000 in equity.
Yep.
So it's a big difference between those renters and how much they're putting in their pocket
Sure.
versus an actual homeowner.
I can't wrap my head around burning your hard-earned dollars. I can wrap my head around not knowing if you have the ability to purchase a house. What I would say is, if you have the want, you have the desire, if you want to take that leap and become a homeowner, the first thing you have to do is talk to a mortgage professional, even before you're getting together with the realtor, because they're going to be saying, do you have your pre-approval letter? You get it from the mortgage guy. I would say find out where you stand and then start making decisions. I've never one time pushed one person into a house, not once. It's a big decision. We have to treat it as such, but I just can't imagine renting. And you've done calculations. I see them all the time. I talk to clients, they're like, how long have you been in your home? I've rented for 10 years. That is a lot of money.
Oh, yeah.
It's just an absurd amount of money. You work too hard, people. Save your money. Leverage your money. Become a homeowner. Find out if you can become a homeowner. It probably takes 15, 20 minutes of a conversation, just trying to get an idea of where you stand. And we go through the process. You take application, we evaluate, we review your documentation. I need to know a little bit more about my consumers. We need to verify their income and verify their assets. And it doesn't take very long. We're as fast can be. I've done it while I'm on the phone with people. If you are extremely organized and you got all your folders on your desktop, and you can throw me W-2s and pay stubs and bank statements, and I literally can do it while I'm on the phone with them. It's not that complicated of a process, but The hardest part of the home buying process right now is for this guy, for the realtor. Because most of what I'm doing right now is I'm running my numbers, I'm having the conversations, we're issuing pre-approvals, and then we have to fight for houses.
That leads me to my next question. What is the difference between a pre-approval and a pre-qualification, and does it even exist any longer?
Yes, pre-qualifications do exist. Shoddy banking institutions, lazy loan originators. I don't believe that there's any legal requirement for them to do their job properly and actually verify. The worst thing that I can see happening to a consumer is getting their hopes up. You get them under contract. 2 weeks down the road, we find out they don't qualify. That's a bad time to find out you don't qualify. You should have known at the get-go. Before you're out with Larry shopping for houses, you should know where you stand. You should know your buying power. And there's a lot of lazy people in my industry. Every month, I am saving loans from other banks. The information is the same that it was when they submitted it. How you issued a pre-approval and you couldn't get the loan closed is beyond me. I have one of the higher percentages of follow through.
So the pre-qualification, basically, the loan officer did not collect all the documentation that they needed to collect.
Yeah, pretty much, Larry. So it's not mandatory, but the difference in my eyes has always been pre-qualification. Yeah, we had a conversation, and I might have looked at a thing or two, but I didn't evaluate your entire overall picture. And unless I have all of your personal documentation, I cannot do my job. There is no magic wheel. You know, there's people don't call me and say, what's my loan? We have to go through the process. Pre-approved means that we've done our homework. We've checked all the boxes. I've run the loan through the automated system. And in some cases now, Larry, we're actually having full underwriting decision with your pre-approved buyers. So that, I mean, we're just trying to take advantage and give our buyers the advantage. So we have an ACE approval system at Nations Lending, and truly, folks, all we're doing it backwards. Before you have a house, I'm getting you pretty much final approved, outstanding contract and homeowners insurance and appraisal and some title work. Some of these sellers out there want speedy closings. They also want assurance that it's going to close. Nothing is worse than waiting 30 days. Your next purchase is on the line, and the day before closing, your buyer falls apart. It shouldn't happen like that. And it does happen like that. And it's sad because these are people's lives we have. It's important.
Alrighty. Sorry, Mike, I'm hitting you up with all these questions that you may not be asked on a regular basis. But my next one for you, and I hear this all the time from other realtors, are talking about all these down payment assistance programs. What's this all about?
So you got to qualify. This is the one thing that I explain to my clients. If they do qualify, a lot of it is income based, Larry. They're not trying to give out free money to everybody who's in a very, very good position. They're trying to help people get into houses. But if your income levels are too high, that's one of the biggest factors that I've noticed where, you know, I work with average home buyers, you know, average. I guess I work with some people that are wealthier, but I mean, I work with your average person. Our average sale price is 200 some thousand.
250 somewhere in the range.
Yeah. It's
But where does the money come from for these down payment assistance programs?
the cities sometimes have assistance. The counties sometimes have assistance. There's third-party companies out there that have assistance. There's certain parts of the community that they're trying to build up.
Right.
So they're doing like incentivizing people to, if you like tax abatement, that's another incentive. But down payment assistance, if you are looking to purchase in this community, they'll cut some bucks off. They'll give you some money. They're trying to help get people into houses.
Right.
But like I said, the biggest struggle, and a lot of this stuff, folks, you can look up online. I mean, Google is incredible. We have pre-approved down payment assistance programs already at our company. So if there was something new that somebody wanted to get approved, we would just send it through the system and see if we can get it approved. But there are there's a lot of options out there. You've got nurses, doctors, you've got police, fire. They've got some incentives for different folks, and they have incentives for different communities. The only question you have to ask is, do I meet the criteria in order to qualify for the down payment assistance?
So if somebody came to you and applied for a loan, would you automatically know or ask the right questions, or would you, I mean, is it something like somebody wants to come and look at a $100,000 home in Parma?
Yeah.
Okay. Would you know if there's already some type of an assistance program that they may qualify and bring that up to them?
So, I mean, in the city of Parma, I absolutely know that they do. One thing that I would like to put out there is some of these cities have budget, right? So they have X amount of money set aside, and when they're out, they're out.
Right.
So it's January, you're okay. February, you don't know when they're going to run out.
So they may have, say, a $10,000 program for first-time home buyers or something like that.
Until they run out of money.
Until they run out of money.
Right.
Yes. Okay. So when people come and apply, you're prepared to offer that type of assistance to them. Okay.
Oh yeah.
Okay.
Yeah. I mean, it's a topic of conversation. I mean, it's if you qualify for free money, we want to give it to you. You want to take advantage of it. It's not hurting your situation. It's actually helping.
Okay. All right. One last question for you.
You got it.
Then I will let you go for the evening here. Once we have the offer in hand and we're, say, a week out from closing, it seems like we run into some situations at the very end prior to closing where people may take out like an extra credit card. They may do something that they're not supposed to do. What's up with that?
So my business partner, Frank Zubel, and we came up with a checklist, and it's what not to do during the loan process. I mean, there's a lot of things that people do naturally that could hurt you. I mean, it could kill your deal. You could have no loan. I mean, I bought a Harley. Well, now you're going to live in your Harley because you're not buying a house. I've had consumers quit their job the day before closing. Understand that I may be a week ahead of schedule, and when I tell you that your file's clear to close, they're going to call and they're going to verify that you still have a job right before closing. Don't quit your job. Don't open new credit. There's all sorts of things that people can do to hurt themselves. We work with, that mathematical term, debt to income ratio. So if you're on the cusp of one more Harley and you're not buying a house, then you don't buy that Harley. So I do a very good job of making sure that my consumers are aware of what they absolutely cannot do in the process, because it could screw the whole thing up and then you don't get the house, folks. That's how it works.
All righty.
Don't quit your job.
There we go. And that pretty much does it for this evening's session of Listen to Larry. I want to thank Mike for being my special guest this evening.
Always fun to see you.
If you would like my, again, summer guide for buyers and or sellers, feel free to call, text, or email me, and I'll be glad to email it over to you. And Mike, how do they get a hold of you?
I've got my cell phone. I can always be reached. It's on me 24/7, and I love my job, and I'm here to help. So you can always reach me at 216-210-8756. Mike Bankowski, Nations Lending. We're happy to help, folks. I love working with Larry and his team, and I like to think that he likes working with me as well.
Absolutely, or I wouldn't have you here. All right. Have a good evening, everyone. Thanks for joining us. Take care. And that's that.
Larry, the biggest question